What's up, guys? This is Carter Thomas with Coin Mastery TV. Make sure you hit the subscribe button if you're new here, and make sure you hit that notification bell just to get notified. Daily updates. We're talking about cryptocurrency, news, macro analysis, how this all impacts down to the individual, you guys, myself, and making better decisions to capitalize on this amazing new opportunity. Wow, we have some great, it's been a great week, hasn't it? I mean, it's just been a very positive week, I should say, for price action. It seems like we're getting some good momentum back. Today we're going to talk about Bitcoin, talk a little bit about Ethereum, because I think Bitcoin and Litecoin really, they seem to be moving together. Yeah, we talked about Litecoin a lot. Yesterday we've been talking about Litecoin a lot. I think Bitcoin is going to be a big story over the next few weeks, maybe months, and we'll talk about why as it relates to altcoins. So I think Ethereum and Bitcoin may start to look a little different over the next few months, maybe over the next year. So I think that that's going to be an interesting story. I want to talk a little bit about what happened with Wax yesterday, both from a price standpoint, but also from the ecosystem, right? From exchanges and arbitrage. There's some interesting stuff that happened yesterday that you can maybe take away from this. And then I want to talk about what the CFTC, they did a second hearing. It wasn't nearly as big of a deal as the Senate hearing. They did a new one with it was like the Forestry Commission. There's some interesting implications. And then finally, I want to talk about our good friend Charlie Munger, not necessarily about what he said, but how the reaction that we would have to that, and also how we can use that to really help us further what we're trying to do, right? Different ways to address this. And I'll talk a little bit more about that as we get to it. But the big story today, for anyone who doesn't know, I'm in the middle of a big rainstorm right now in an island in the middle of the Pacific Ocean. So if you hear any background noise, that's why. This morning, wherever you are, hopefully on the west coast of the internet, hopefully, if you are on the west coast of the United States, we had a big breakthrough through 10,000. I drew this second line yesterday, right? This was the next big line, the big breakout that we're looking at. I'm looking at the 1 hour on Coinbase for Bitcoin. And you can see this was the previous resistance. And we talked about how this was a big deal because after this resistance point, there was a big drop off. So it only touched it really twice, but it was kind of the last hurrah before we hit this big bottom. And you can see over here, as soon as we broke through it, we had a little bit of retracement, and then it really bounced back. And so this is exactly what we talked about yesterday. When you see prices break through, you see them come back a bit, and then they run up to the next resistance level. And that's typically what you can just look at previous resistance and support. And then that resistance turns into support. And so you can see it turning down, going off of that level, coming back, going off of that level. And this is this is the name of the game, especially in Bitcoin, right, as it trades. And so when you zoom out, you can see that the next major resistance level is right around 11,700 on Coinbase, which is also GDAX. Now, in the interim, you can see over here on the left, there's a little bit of a chart thing going on here, but that kind of got cleared out by this trading. So right around 10,250, 265, we're going to see some resistance, which we've already poked at a little bit this morning, and we bounced off of that. You're seeing some pretty good clearance right around the 10,700, but in my opinion, between 11,100 and 11,700, 11,700 is really a chop zone, and so you're going to see potentially some pushback on that. If we get through that, we're going to move on to the next layer. Okay? Now, the question obviously that everybody's asking is, hey, when do I buy in? Or maybe you've already bought back in, whatever you're doing. Maybe you're just dollar cost averaging, so you don't really care. That's always the question. And just like we talked about yesterday, you wait for confirmations. And the shorter your time frame that you're looking at, so in this case, we're looking at the 1 hour, which I would consider pretty short unless you're a day trader. The shorter the time frame, the lower probability of the confirmation is. Meaning, if you're going to buy in when you're seeing this, when a price has a breakout, then it has a retracement, you're looking for that support, and then it starts to go back up. The shorter the time frame, the riskier it is. If you go to the daily, you would wait for confirmation to happen again. So, right, like so you'd see 2 bars. You might want to see a little retracement on that, maybe go up again, but it would be a higher probability that this would be a bullish pattern. So do you see what I'm saying? The shorter term you're looking, the riskier it is. And so you just want to wait for confirmation on a larger time frame. Like I mentioned yesterday, I'm buying back in slowly, and as we get closer and closer up to these next big areas, and really the higher up we get, the more we are breaking out of the bear trend, the lower probability it is. Obviously, you're giving up some of the upside, but as long as you're using type stop losses, that can work out well. So if you get, I think it just comes down to what you're good at, what kind of risk you can tolerate. If you are a trader, you know what to do, right? That's the name of the game. You play your own game. If you're an investor, you buy it, you hold it, you let it ride. Like you let it go. If you're uneasy about your trades, you set the stop losses. You want to make sure they preserve capital, whatever it may be. But that's it. It's not. There's no definitive answer. Nobody knows if this is going to continue to blast through everything. Seems like it's got good momentum right now, but you got to make your own decisions. You got to do that, right? So that's what we're looking at. We're going to see some more resistance probably over the course of the day. We may see some a blast off up to around 11,000 if we get a lot of juice. I don't know if that's going to happen today or tomorrow. But once we get up to this next level, that's when things are going to start to get a little more interesting. Now, flipping over to Ethereum, and we're looking at the Ethereum USD, you can see these retracement lines held pretty well as a resistance level for this price action, and you can see it's clearing out a little bit on this chart. There's a little bit of a fast drop down back here on the 4th of February. So it traded that out pretty well, but there's still a good amount of resistance all around this price area. So I would say Ethereum's is really going to be a chop zone until it can break 1,000, if it even gets to 1,000. If it does, that's going to be a good sign, because then you could see this longer term trend. It's going to be able to really move its way through that. So with Ethereum, I would really watch the volume. I would look at the ICO schedule. I would see what are some of the big things that are going to be driving Ethereum transaction volume in the coming weeks. Right? How is that going to play into what's going on with Bitcoin, with Litecoin? And watch it. The higher it gets, the more it gets closer to that 1,000. And if it breaks through that 1,000, the more of a confirmation that is for a new bullish pattern. All right. So this is just a really interesting time. I think that the big takeaways, though, less about price and more about strategy, which is what we're going to talk about in a second here with the altcoins. But first, I want to bring up what happened with Wax. If you don't know, Wax is like the worldwide asset exchange. You can buy digital goods in virtual games, which sounds kind of, if you're not into that world, you might think that this is not a big business. This is a huge market, right? I can't tell you how. It's like billions and tens of billions of dollars worth of virtual goods that people buy. Okay? And so this isn't about Wax or anything. I do own some Wax. I'm not saying necessarily talking about Wax itself. You need to go, if you want to check out Wax, go check it out, whatever. But what was interesting is that this was trading on, I think, Huobi, Buybox, and a few other random exchanges, but it wasn't on any of the big ones. It wasn't on Binance, it wasn't on Bittrex, it wasn't on KuCoin or anything like that. Yesterday, it was listed on Bittrex. And as soon as it was listed on Bittrex, there was a massive, massive arbitrage, the biggest I've ever seen. And it was a big arbitrage where the deposits and withdrawals were all active, right? Sometimes you see a huge arbitrage, but that's because the wallets are closed, and so you actually can't do anything about it. But this was a really interesting situation that happened. And what I think is the big takeaway is that when you see a very high quality or very large market cap coin that is doing pretty well in its own right, but it's on these smaller, low liquidity exchanges, and then it gets listed on a big exchange, let's say Binance or Bittrex for now, typically the price tends to go up. And you can play the arbitrage game because if you can make it work, you can make a lot of money. But that's a good strategy because the arb will bring the price up. The liquidity will bring the price up. Versus if it's something where they get listed early onto the high liquidity exchanges and then later on they get added to more and more exchanges, that often brings the price a little bit down because there's enough liquidity that the price discovery has already happened. And so I think that this is a really important point, is because when I look at, it's prevalent in the ICO space, but it's really just prevalent everywhere. People are looking for that exchange. They're like, oh, when's it going to get listed? When's it get when are we going to get on this exchange? Or when are we going to that exchange? That's actually not always a good thing. It can work both ways. And what I'm finding is that if you have a really high quality product that has really good investors and potentially has a relatively large market cap, and it starts off on the small exchanges, works itself out, it allows anybody who did pre-sale who's impatient, they start getting rid of their coins or whatever and dumping them like idiots or whatever they do. And then down the road, it gets listed on a large one, which does have the liquidity. That can often be a better strategy purely from a price standpoint than the other way around. My point is, don't get hung up on what exchanges your coin gets listed on out of the gate early on. It's not always a good thing to get listed on Binance early or Bittrex early. Often it's better to get listed on them later, own a lot of it somewhere else, and then you can either arbitrage it or that the price may come up because liquidity is really going to drive the price. And unfortunately, there is no formula for this. I can't tell you, hey, here's the list of what's going to get listed. I mean, that's all private information. Nobody knows what's getting listed anywhere except for the insiders. So there's no list, and there's no step-by-step guide to do this. But that's why there's so much money. That's the game, right? Like that's why you can make the money you want to make. So as you're doing your research, as you're going through your altcoins, your ICOs, whatever, you can see coins that are listed on exchanges that are not the big ones, that many people do not have accounts with, Buybox, Huobi, IDEX, whatever. You do your research, be like, man, this is a really strong coin. If, I'm not saying Wax, do your research on your own on Wax, but then this is probably going to go on one of the big exchanges. That can work really well, and you got to do your research. Nobody has the answers, and it's not like I'm holding back. I genuinely, you gotta go through and figure it out. But it is a strategy, and it can work in your favor if you're willing to put in the work. So something to keep in mind, and I think that it's also interesting. Bittrex has clearly passed some sort of milestone in their company where they are now listing new coins again, because they're putting out more and more coins, meaning this sort of opportunity is going to be available more and more often. Okay, so I thought that was just like really interesting. It's something that I'm going to keep my eye on as it comes. Right, I did not see this coming whatsoever. It's just that after it happened, I looked back and I realized, hey, this makes a lot of sense. I should have seen this coming. I could have strategized for this, and I will in the future. Now, the other big thing I think as we watch this unfold, Bitcoin, Litecoin, and everything else or Ethereum, I should say, is that when Bitcoin ramps, a lot of altcoins are going to look like they're getting crushed. And now many people are going to open CoinMarketCap, and for better or for worse, it defaults to US dollars. I'm just going to get the latest data here. I'll refresh it. All right. So you're going to look at this and you may scroll down and say, oh man, everything's doing well. Look at this. We got plus, everything's relatively green. But what you really want to look at in the drop down is that you want to look at the coin that you want to collect the most of. If your goal, I should say, for trading is to gather more Bitcoin, that's what you should pick. If it's to gather more Ethereum, Ripple, Bitcoin Cash, Litecoin, okay, right? That's the one you want to do. Let's do Bitcoin. That's probably the one that most people are going to use. The reason why I do this is because you want to be trading against Bitcoin. You don't want to be trading against US dollars, because otherwise you're just going to miss out on what's getting the highest gains. Now, if you don't understand what that means, go on my YouTube channel, all right? Go to youtube.com/coinmastery. There's some playlists. One of the playlists, there's a video that says how to trade USD versus BTC, like which pairing to pick. If you don't understand how this works, go watch that video. It should help you understand this. But this is going to be the new thing that causes people to make bad decisions. Assuming Bitcoin continues to ramp, which I think it will over the next year, altcoins may hold their USD price for a while just because of the pairings until we get fiat pairings for altcoins. But the Bitcoin Satoshi value is going to get smoked. And this is a really important thing, meaning often people, when they see Bitcoin starting to ramp like this, they immediately start to buy altcoins because they think, hey, altcoins are small cap. They have the potential to outpace Bitcoin. And while that can be true, Bitcoin has in the past proven that if you always want to have some, you always want to own some, because if it will inevitably beat a majority of coins until the next, as they say, alt season. And you want to be in a position where you always have some of the currency that you want the most available, so that you can buy up whatever you're looking at. Meaning, keep some Bitcoin if that's what you're trying to get after, right? Don't liquidate all of this into altcoins in the hopes that altcoins are going to beat Bitcoin. That doesn't work unless the altcoin market does it as a whole, or what I would predict more realistically over 2018, individual companies have individual opportunities that come up to beat the market. But they're the only thing worse than missing like the big run of a market is holding an altcoin and watching Bitcoin just outpacing it like crazy and watching the Satoshi value go way down, while you kind of can justify it because the US dollar is either holding steady or increasing a little bit. That is a painful experience. And so I know for myself, that's one thing. That's one of the reasons why I keep Bitcoin, at least a reserve of Bitcoin locked up. I don't touch it, knowing that when there is a huge opportunity, when altcoins are super low, like Stellar was back in November, right? You can really capitalize on the low Satoshi value, and that's how you get the huge wins on both USD and Bitcoin pricing. All right, so that's the best thing you can do. Start to do this. If you go to CoinMarketCap every day, like everyone does, start looking at this in different terms. Start not just USD. Start looking at Bitcoin. Start molding your portfolio that way. It's really, really helpful. It's going to help you make much better decisions. Now, nothing too crazy here with the CFTC chairman. If you guys don't know, that's the Commodities and Futures Exchange, right? The Trading Commission. They had a huge hearing with the Senate. Was it last week already? And they had a new one where it was kind of funny. It was the Agriculture, Nutrition, and Forestry Committee, which doesn't. I mean, I guess the IRS considers crypto a property. The CFTC potentially considers it a commodity, right? And the SEC considers it a security. So there's a lot of ambiguity in the regulatory sense. So I'm assuming that's why this is who he talked to, right? The people that are most impacted by commodities regulation and laws, right? The agriculture, forestry, that sort of thing. And what he talked about most openly was the exchanges. And I think that this is going to continue to be a very, very big deal. And I think the immediate reaction is that, decentralized exchanges are going to solve this problem. And I've talked about this before. If you didn't see, go watch the video from Sunday. It was a live stream. You should go check that out. I talk at length about what I think the decentralized exchange is really going to help with. But what I do think is that these exchanges will become more regulated. Coinbase, Bittrex, the US-based ones, right? There's only so much they can do with that. And it's going to create the more custodial framework. so that there's a little bit more like auditing, people understand what they're getting themselves into. It's just gonna be like trading on a regular stock exchange, more of a compliance situation. That's not necessarily a bad thing. At the end of the day, these guys are just trying to make sure that people aren't manipulating the market. They're not screwing over what they call Main Street investors. So it's not an attack on exchanges. It's just realizing that not to sound too alarmist, but I think that anybody, if you actually saw what was going on with bots and whales and market manipulation on any of these exchanges right now, it would make you think twice about whether or not you want regulation to come in and monitor what's going on, because it is being massively manipulated right now by a variety of actors. So that's just a piece of news, right? I think it's just they keep coming back to the exchange side of things, and I think it's good that they have a focus and that they're being open about what that focus is. And so I think that as we move forward, exchanges are going to be the name of the game, right? There's going to be exchange arbitrage, there's going to be regulatory arbitrage, there's going to be lots of different opportunities as the exchanges come in. But the beauty of crypto, unlike traditional securities, is that you can be your own bank, right? I mean, you can control this, right? You can't take your Apple stock and put it on your Trezor and go put it in a safe deposit box or whatever. Apple stock is just there. I mean, I guess you could get certificates, but that's pretty not really going to happen. And so it's good to watch this happening. It's whenever you watch regulators, you want to see where they're looking, because you better believe that is where a lot of the manipulation and risk is happening. ICOs, exchanges, that's where they're going to go first. Now, I'll link to this. This is like if you want to watch the actual live stream, it's not that interesting. Now, lastly, I saw this floating around on Twitter with Charles Munger. He's one of the partners at Berkshire Hathaway with Warren Buffett, and he said that buying Bitcoin is totally asinine and it's just disgusting, et cetera, et cetera. Now, the first thing that people often say when they see this, especially in the crypto universe, is, this guy doesn't get it. He's an idiot. He has no idea what he's talking about. He's an old man. He's stuck in the past. And let's just be very honest here. Charlie Munger and Warren Buffett are two of the greatest investors of all time. Now, they have a very particular style of investing. I'm not saying that you got to like them but they've gotten unbelievable returns through their process. And their process is value investing, meaning they find companies that they consider to be undervalued. They look at the balance sheet, the profit and loss statement, a few other things, and they buy them up and they roll them into their conglomerate of Berkshire Hathaway, heavily focusing on management. That's really their thesis, is undervalued companies with killer management. That's how they made them money. These guys know a lot about making money. They know a lot about investing and finance, maybe more than anyone out there. And I think that is something you can't dismiss. It doesn't matter. I mean, you just can't. They've put their points on the scoreboard. Now, what I do think is important, and I spoke at a conference or like a event in LA a couple weeks ago, and this was a question, like, how do you talk to people about blockchain? How do you get them involved? And my answer was, well, first thing you got to do, as any marketer would, is you got to understand where they're coming from. You can't expect a one-size-fits-all response for everybody. And so with Charlie Munger or any investor, I mean, I think this applies to anybody who's in finance or even in the startup world who thinks that they've got it figured out, right? Like, they spend their whole life figuring out the system. And even at the end of their life, they may not feel like they figured it out, but at least they've gotten really good at it. And beyond the whole, it's hard to teach an old dog new tricks, you have to put yourself in that position. What would it feel like for you if you were 94 years old and you had made hundreds of billions of dollars And now people were telling me, oh, this is the new thing. This is going to be unbelievable. And it's completely different than everything you know to be true about capitalism and money and all that. Right? Like I would be willing to bet that a majority of people would respond the same way. And you got to put yourself in the shoes of somebody who's like that. And so the way you respond to that is you talk to them on their terms. You talk about them about economic models, right? You talk about, okay, well, in the value investing sense, this may be worth us, a company, Coca-Cola, may be worth this. How much would Coke be worth if we valued it this way? Or you start changing the way that they think about their current investing strategies and whatever else. Same with startups, right? You talk about, well, I'm just any crypto. Let's say if Monero was on AngelList as a startup, what would be different? Why would this be different than if you went on AngelList right now, which is like a Craigslist for startups, or you can go invest in them? What's the difference? You got to equate it as much as you possibly can on something that they understand and see how they're evaluating it. So, and the first thing they're always going to say is, oh, they don't make any revenue, right? This isn't a cash producing asset. This doesn't make any money. Therefore, it's not valuable. And then you slowly build out the argument like, okay, well, 20 years ago, would a social network be worth $500 billion with a PE ratio of whatever it is, 100 something, whatever, like crazy number, right? And you slowly start to help them realize how models do change and that this is just a massive change happening way too fast in their terms. And you slowly build it out. And the reason why I'm talking about this is because the more we have a us versus them mentality, it fuels the fire, right? It can fuel the price, it can fuel the revolution, it can fuel all of this. But it doesn't help to move the major needles, which is the regulatory and the people who have all the money. We need to have an education, a discussion that's like an informed discussion that's about everything except for price. Because when it boils down to price and you're trying to explain it to people that they think they figured out price, it's a losing discussion. You'll never win, and no one will win. It's a lose-lose situation. And so I think it's so important to try to put yourself in their shoes and just change the discussion where you don't talk about how much it's worth or what the price is or whatever else. You just change the metrics. You change that. And that is at least a way where you don't both leave feeling like you lost. You can both leave being like, all right, well, they taught me something new that I can think about now. And I think that this is a precarious moment for crypto in the grand scheme of things, because it's not that it would necessarily kill anything that's to do with crypto. I don't think that's not necessarily what this would be about. It's just that the more resistance leaders, thought leaders that we have, the harder it is for this whole thing to take off. The harder it is for deals to happen. The harder it is for institutional money to come in. The harder it is for regulators to just sign off on this being a go-ahead. And so I always come back to this, and I always think that this is such a huge and important thing, is to consider ourselves educators and not evangelists. We're not maximalists. We're not talking about how crypto is better than the old system or the current system or whatever. Even if you think that can't be your narrative. It has to be, I believe that crypto can offer value in a new way, and here's how I think that it's different than what the current system is. You don't treat it like you're on some pedestal and it's the best, because guess what? The establishment always wins those battles every time. It's not about finance. I mean, it's politics, finance, the health system. I mean, everything. The establishment always wins with, hey, here's how it's always been. Don't tell me what the new system is. You got to go in with an open mentality. So anyway, I thought that was helpful just because I go on Twitter sometimes and I see people just having such emotional knee-jerk reactions, and it's not going to help. It's going to make you feel better, but it will not help this whole thing that we're a part of. And eventually, I know that at the end of the day, like, yeah, this will make you hopefully more money, wealthier. But it starts with this micro conversations into a macro movement, which then leads into the market growing. That's the flow. It starts with the individuals having impacts going like that. All right. So we'll leave it with that. I think that it's going to be a very, very fun day, interesting day. We're already seeing a little bit of resistance at this 2,000 or 10,200. And then from there up, we're going to see a huge kind of chop zone box. And then by the end of the week, hopefully we break through this. We're going to have some interesting things happening. All right. Well, guys, as always, it's been terrific. I will catch you tomorrow, and peace out.